I want to welcome everyone. Thank you so much for being here. Mary Claire, welcome. I can see that we have an opportunity now to rock and roll. Let's rock and roll. I can see some friends here are joining. Thank you for being patient with me. This is Money Talks with Lynn Kitchen, and we are here for some portfolio review and an opportunity to be together. First, why don't we take a second and just in the chat, if you don't mind, let me know where you're coming from. Where are you in the chat? Where are you coming from for us to see? Happy to have you here today. All right, coming from Virginia, Maryland. Excellent, excellent. This we'll just give a chance for a few more people to come in, and welcome everyone. I'm truly excited today because this is an opportunity for us to take a moment, take a pause, and look at this time together in what I think is an historic time in the financial markets. And so I've got lots in store for you. What I'm going to do first is a little bit of housekeeping as we're waiting for a few more people to come in, and welcome. Just to give you a little agenda for today, this is a 90-minute master class, which means that we're going to be going over quite a bit of material. And then it's a birthday party. So stick in here, and we're going to be celebrating because today is my birthday. Yay! And so I'm so excited to have you here with me. Thank you so much. Yeah, that's right. Thank you so much. So here's the agenda. We're going to have this in three parts, really. Securing your portfolio, mastering market trends and the economic shifts so that you have the financial clarity and certainty to continue this year, 2024, and beyond. So here's our agenda for today. We'll spend about 30 minutes in each one of these. The first part is mastering the current market trends. As we're seeing, there's an awful lot of rock and roll, up and down, volatility already in the month of July. So we're going to be looking at the current market trends and how it affects your portfolio. And then we're going to be talking about how we can optimize some critical areas of your portfolio. And then finally, we're going to be talking about how to make confident financial decisions going forward. How does that sound? I'm absolutely delighted that afterward we're going to have a little bit of a party. So this is our time that we can be together to really, truly master some of these things that have been bothering us. Now, let me tell you just a little bit about myself. But before I do, I just want to mention that I see several of my clients here today. I want to welcome my clients. We have a monthly membership group called Wealth Builders Express. And every Wednesday night we get together and we talk about questions that we have in the financial markets. And so I'm really delighted to see you here. In addition, I'm wanting you to know that tonight I am going to be introducing a brand new idea for you, and it's called, and so I want you to stay to the very end because we're going to have a chance to take a financial health checkup. And this is something that's a gift from me to you. I think you're going to be really excited about it. I'm really excited about it. So make sure that you stay at least to the end of our masterclass, and that's going to be a gift from me to you. So thank you again. I can see more and more people coming, and today is a magnificent day because it's almost halfway through a little bit more than halfway through the day, through the year, and we're going to take a pause to just look at our lives, look at our portfolios, and see how we're feeling today. So let me ask you, on a scale of 1 to 10, regarding the stock markets, the bond markets, the real estate markets, the entire panoply of political markets and so forth, how are you feeling? How would you say that you were feeling? So on a scale of 1 to 10, 10 being positive and 1 being negative, could you just put in the chat for me how you're feeling in terms of your personal thoughts here, so that I could just kind of measure how you're feeling? A 7, okay. So on a scale of 1 to 10, 10 being positive, totally positive about everything that you're seeing. 7, so that's pretty positive. Just put in the chat how you're feeling about the overall economy. Kind of give a chance to take a pause and feel how you're feeling about everything here. What's going on in the world today? 776, okay, a little bit down. Yeah. So this is an opportunity to really check in with ourselves to see what it is that we are feeling based upon the information that is coming to us. So that is what I believe is my specialty. I am a financial coach as well as a financial advocate. I help investors really understand what's going on in the market. I help investors almost like a second opinion doctor looking over your shoulders as a for your portfolio, taking a look at those areas that you feel you need a little bit more help with. And this is something that I do. Let me tell you a little bit about my background. My first career was 34 years in the investment world. I had the opportunity to just jump in right out of college as a young stockbroker at a time when women really were not allowed to be stockbrokers. Certainly, you could become a secretary to a stockbroker, of course, for maybe 7 or 10 years before you got the opportunity to really speak and deal with the clients one-on-one. But I did have the opportunity. Someone gave me an opportunity as a young woman to become a stockbroker. I was with a major firm, Dean Witter Reynolds, for 2 years, and then Oppenheimer for 2 years. So really with the major firms for only 4 years before I started my own broker dealership. Well, now looking back, I was one of the first women on the West Coast to open my own broker dealership and hire other women, men of course too. But I grew that broker dealership and eventually sold it after about 12 years, and had a second opportunity then to meet with and partner with 2 other wonderful gentlemen in Pasadena, California. And we opened and built a second investment advisory firm, built that up over time and sold it. So truly over the span of 34 years, I have started, built, and sold not 1, but 2 investment advisory firms. And during that time also, I was a teacher. I taught investment classes to adults in the Pacific School of Finance for over 15 years. And as a result, we had probably the smartest clients of any investment advisory firm, I have to say, because we had so much fun to really talk about how can we become really smart and savvy investors to really understand what's going on in the marketplace and then apply it to our portfolios. So that's a bit of my background. After I retired, I had a wake-up call in which I needed to recover from 2 bouts of cancer, but at the same time, I decided to move from California to Florida, marry my love of my life, and retire. But guess what? I got a little bored, and so I decided to explore a few other avenues of my life, including becoming a television producer for about 6 years. And then I had an opportunity to come back to center and ask myself, what shall I do for the rest of my life? And you know what the answer was? It was a little voice in the back of my head that said, well, do you think that you would be comfortable ending your life with all that knowledge still left in you? And you know, it kind of shook me up, and I thought, oh my goodness, it's true. I have a 34-year career. I'm here to really serve in my life. What can I do? How can I serve? So I decided to teach investors now how they can become better investors. So about 18 months ago, I started Money Talks with Lynn Kitchen, a financial clinic with uh, courses that you can enter and you can learn more about the basic principles of investing and how to apply it to yourself. So with that in mind, I am so delighted to bring to you today this masterclass in which we are going to be taking a look at a couple of areas of our lives together as it relates to portfolios. So let's begin by first taking a look at what's going on and really mastering the current trends. I've already asked you, what is your predominant feeling as it relates to the markets? And you've given me some pretty good answers, 776. Now that there's a few more of you entering, do you want to just give me, is there anybody who has not answered that? Could you answer what is your predominant feeling right now of the overall market trends on a scale of 1 to 10, 10 being the highest, the most positive? Put in the chat for me if you would. What is your feeling, your predominant feeling about the overall markets? 5. And you know what? I do believe that what we are sounding boards individually for the overall economic trends. And so I do believe that this is something to pause and pay attention to your own feelings. And I was wondering if maybe it feels something like this. This is a picture. Can everyone see this? A picture of a couple. And are you able to see the picture of the couple here? Can you just give me a high sign, a thumbs up? Nope.
No.
So
No,
I'm
we
not
see
able to
you.
see, Mike,
No.
1 second.
Yeah.
Yes.
Let me see if I can get the slides going.
Lynn, I think there may
There's
be
a
some
thumbs
people
up.
waiting to come in.
Let me just double check that our slides are working. Yes? So now you're able to see, thumbs up. You should be able to see a couple. All right. So this is probably how you might be feeling in terms of the amazing amount of uncertainty that we are really facing as investors. What I really want to understand is that I do believe that 2024 will be a time in which we can say it's a tale of two worlds. Two conflicting markets are actually conflicting, almost like tectonic plates going on. So we can say it was the best of times. We have had some of the most rising record stock markets worldwide, rising alternative investments like Bitcoin, making new highs, rising precious metals like gold and silver, rise of convergent new technologies that are bringing up the markets, for example, AI and generative AI, and truly historic returns happening now in the markets. So we are pulled by the possibility of the positive trends in the market, and yet there is an opposing force that we are feeling, and that is that it could also be the worst of times. Let me just talk about what we are seeing even just this week as the wars in this world get even more dangerous. Two wars, as you know, Ukraine, Gaza, the escalation with Iran, Lebanon, a tsunami of immigration influx, a commercial real estate potential collapse, if not now imminent, bank failures on the horizon, historic debt levels, the possibility of de-dollarization. We're not quite sure how the dollar is going to hold up over time. And then, of course, the election year being probably one of the most historic, difficult election years ahead. So with that, we can say we have potentially both the worst of times and the best of times, and what is going to win. For the rest of the year, it feels as if we are trying to decide which way is it. Are we going to recession? Will we be heading into a soft landing for recession or a hard landing? Am I right? How many of you are feeling that we possibly are going into recession? Put a 1 in the chat if you believe that we most likely will be going into a recession. Just from your perspective, your personal point of view, how many of you feel like that is a feeling of imminent potential next direction? 1, okay, I can see one person put a 1 in the chat.
I do.
If you feel like we're not going into recession and that we might be able to have what they call a soft landing, put a 2 in the chat for me. How many of you feel like we'll have a soft landing? All right, I see a few 2s coming. A few more of you feel like they're going to have a soft landing. Well, I think that that's very important for us to take a personal temperature to feel what we do have as our own intelligence, our own intelligent gathering. But here are some of the things that we're looking at. Interest rates, up or down. Inflation rates, up or down. Growth rates of companies, growth rates of earnings. Are we going up or are we going down? Employment, are we going up or going down? The national debt, bad to worse? How about the national elections? Potentially bad to worse? All of these things are coming into play in terms of what's going on in the market today. And I am noticing that especially in this last month alone, the answers to this, up or down, has changed depending on what day it is. It can be Monday it's up, Tuesday it's down, Wednesday it's up, Thursday it's down, and I believe that you're all looking at the beginning of the volatility of this battle between the two sides. Which one is it going to be? And so what I believe it does is it makes us take a look at what we feel, and what may really be going on is what I call a recession of trust. A recession of trust. Individually, we seem to ask, who can I trust and what can I trust? Let's face it, we feel oftentimes, let me ask you if you feel this way too, put a 1 in the chat if you feel like you are drowning in information right now. Perhaps you feel like you have a lack of clear direction. Your choices are getting more and more complex. You have a higher consequence of negativity coming at you almost daily. You feel like unknowns are multiplying, and you feel that the former risks that you were taking potentially are greater. How many of you feel that way? How many of you feel like, well, what's really going on within us as individual investors is that we're feeling a recession of trust? How many of you feel that way? Put a 1 in the chat for me so that I can really get a feeling about, is this the way you feel? And if not, let's put a 2 in the chat, because if that's not the way you feel, I would love to know about that as well. But I do believe that one of the things, 1, 1, 1, 1, 1, yeah. I think that that's, 2, you're feeling more positive. Okay, I think that's great. I do think that this is a pivotal time where we can take a look at inflection points being very, very important for what's going on in the markets. We could be at an inflection point right now in which those of us who are feeling quite positive might shift in terms of our future analysis, given some of the more data points that look like they may be coming out into the future. So let's take a look at what it means to have an inflection point. I'm going to just be going over a couple of slides, and let me just I'd like to come over here to this here to the big screen so that we can see the impact here of some of these slides. The inflection point that we're seeing right here in inflation. This is a 5-year chart, and this is a very good indicator of where we are really in inflation. And right here, I believe that we have an inflection point coming to us, where the interest rates inflation appears to have topped out in the area of the 5%. But then right now in 2004, July 2024, we have inflation almost down to below 3%. And this is the area in which the Federal Reserve, their target is right at 2%. But we're noticing that the inflation is right at that place of an inflection point where it could be that the Federal Reserve is ready to drop those interest rates. Well, it's interesting that at inflection points, historically, we definitely have usually also a high valuation. So this is a chart of the Standard & Poor's 500 over a period from 1996 to 2024. So a very good representation of over 30 years. And what it does, it shows us the different inflection points in history in which we have the change. Whoops, that I think went, let me go back to, we're having a technical difficulty. I think I'll go back to these slides here because that screen is, my apologies. Here we go. This is the slide that we're on in terms of inflection points. We have these particular times of inflection points historically in which the markets have oftentimes seen their high historically. Let's take a look. The most recent one, if it's true that the end of June 2024, which is the high right here, the PE, which is a measure of valuation, price earnings ratio, right now is at 21 times earnings. And that can be compared to other inflection points in the market. For example, in 2022, we had an inflection point, which was the high of the markets, January of 2022. And at that time, the PE ratios were also right around 21%. In February of 2020, we had an inflection point in which the valuations, the PE ratio, was almost 20% as well. Another inflection point in October 2007, as you all remember the meltdown right before 2008, that top of the market there, which we can call an inflection point, the markets were at a PE ratio of 15, a little bit more than 15% then, 15 times, pardon me. And then also back in March of 2000, the year 2000, which was the height of the dot-com bubble, the PE ratio 25 times. So usually when the markets have an inflection point, it will correspond with a PE ratio moving up to a high area of right around 20, 21, sometimes 24%, 24 times in the stock market. So this is something to pay attention to, because the possibility exists that if we have higher inflation, if we don't have the interest rates moving back down, this could be the top of the market. And what are we going, one other area that we could take a look at in terms of how can we measure whether we are in an historic inflection point. Let's take a look at the Standard & Poor's 500 as it relates to what we call forward PE ratios. And historically, we can put it in a band right in the middle here. The band is a 30-year average of about 16 times. That's the average over 30 years, the valuation of the Standard & Poor's 500. And so the hash mark in the very middle of this chart would show the average, and anything on top of that will show a higher valuation. Well, we can see that in 2024, we certainly are at the high rate and have been for quite some time. We peaked earlier in 2022, you can say at 22 times. And there have been historic times when the PE ratios have been so low that the Standard & Poor's 500 was a screaming buy. But you can see with a chart like this, to really be able to discern that the probabilities are telling us that we are in a very high valuation time. So these kinds of understandings of where we are in the market are important for us to really help us to make decisions as it relates to our portfolio. So, question, how do we secure our portfolios going forward? Would anybody like to talk about how would you like to secure your portfolio? Why would this be important? Well, one of the most important things that I have noticed throughout my career as an investment advisor is just when I worked so hard to help investors grow their portfolio to a very, very lucrative place, it always seemed that something came from left field to absolutely undermine the portfolios, and quickly they would decline. Not all the time, but in most market drops, especially in deflationary market drops when interest rates are beginning to come down. And if it is true that we're moving into a time when, even today, the Federal Reserve might be meeting and announcing either their first rate cut in years, or they'll be indicating that their next rate cut most likely will be in September. As those rates begin to come down, what happens is that the markets, which have already they have already prognosticated a future with lower interest rates, the prices, we can say, have already been evidenced into the market. So with that in mind, when the interest rates start actually coming down, that's when the markets have the highest probability of volatility. So what we do want to do is protect ourselves if it is at the top of an inflection point and moving into the bear market. What can we do? Oftentimes, we want to make sure that we're not overly creating a higher problem for ourselves. In other words, if this possibility of volatility is just going to be a short-term correction, then we want to prepare for what I call mini steps to help to protect your portfolio in steps along the way. So let's take a look at some of the ways that we can help to secure your portfolio. One of the best ways is to optimize the critical areas of your portfolio. So what do I mean by that? What are the critical areas of your portfolio? And then we also want to take a look at your goals for your portfolio. We want to reduce the short-term risk and volatility while preserving the long-term growth. So those would be the objectives for securing a portfolio during a time of a potential inflection point, which is unknown to us at this point. But one of the things that we do want to look at is how we can do that and what are the critical areas of our portfolio. So here I have shown two different categories of your portfolio that we can look at. One category, a critical category, is what I call risk off. This is a time for you to really look at what your investments are. Are they exposed to more risk than you can tolerate? For example, do you have too many investments in areas or asset classes that have higher risk? In other words, we would say that is risk on. Or are you safe and secure with risk off securities? So the risk off securities are safer, of course. They have a lower return, and that would include cash, cash equivalents, money market funds, CDs, and treasury bonds, right? The risk on parts of your portfolio where you're taking on more risks. Why? Because you're wanting the higher returns. Will include these asset classes: stocks, mutual funds, ETFs, including exchange traded funds, higher yielding bonds, real estate, and real estate investment trusts, REITs, alternatives like Bitcoin, and land. So these are the asset classes that we take more risk. And at this time during an inflection point, this is the time to really look at your portfolio and analyze what is the risk that you are bearing. Do you have perhaps enough of your portfolio allocated to risk off? In other words, safety. Or are you 80%, 90%, 100% allocated to risk on securities? In that case, this is a time potentially to move from risk on to risk off. Well, how do we do that? Well, we simply take an opportunity to either meet with our investment advisors. If you have an investment advisor, this is a critical time to take a look at your portfolio, to look at your exposure, to reevaluate the risks that you are taking, to make sure that you have enough safety built in, And for those parts of the portfolio that are at risk, do you understand those risks? Do you know the quality of the companies or the asset classes that you do own? I have had clients that I've worked with who oftentimes have told me they don't even open their monthly statements. Of course, this was back when we had monthly statements before the computer, where they sent you the monthly statements in the mail. But it's true today. Oftentimes, I have found that clients who are feeling like we might be moving into a difficult time in the market, they wait. They often wait too long, and oftentimes it's too late, because the volatility of the markets can happen so quickly that we get we get spoiled. We get to thinking that the markets are going to be going up all the time, or we're going to have more time to deal with these things. Oftentimes that is what I call a hopium, that we're having some hopium. Many clients are then often disappointed because after the market decline, they look at their portfolio and say, what could we have done? So this is a very, very critical inflection point in my opinion, that you can be taking a look at what you own, having conference calls with your investment advisor. If you don't have an investment advisor, make sure that you reach out to someone that you can trust, and make sure that you are looking at what you do own. So there are 3 basic portfolio strategies to move into a secure position with your portfolio. I'm just going to go over them. The number 1 strategy is simply liquidation. It's simply liquidation. Liquidate a portion of your portfolio from risk to safety. Now, many people refrain from doing that because they feel like they don't want to pay taxes on the gains that they have in their portfolio. Oftentimes, if we're talking about an IRA or a tax-deferred, tax-protected account, there's no tax consequences there. So it's a little bit easier to make a decision to liquidate, to move from higher risk to safety, because the tax consequences aren't that bad. However, in a taxable account, I've noticed most of the clients say, well, we'll need to really take a look at the capital gains that are a result of that liquidation. So the reticence to actually sell a gain is quite high. However, what I have often noticed with lots of clients is that later on they wish they would have. Later on they wish they would have, because when the markets come down, they come down quickly, as we said. Oftentimes people are forced to liquidate later. They could have liquidated at a higher price. And what I believe is that I have a rule of thumb called the sleep at night factor. You simply liquidate down to a comfort level. That doesn't mean that you're liquidating the whole position. But let's say you have your largest position is concentrated in a few stocks or a few assets. You may want to just liquidate perhaps 20% of it to move that portion into cash, or 25%. The key here is, what is the allocation of cash that you have to protect your overall assets? And at this time, I can only say that historically, this would be the time that I would be advising my clients to build more cash. What's that mean? It just simply means taking some of your assets out of the risk on category and shifting them to a risk off category. So that simply is the first basic strategy of securing your portfolio, is simply moving to safer ground, a percentage of your holdings. A second way to have a secure strategy is to diversify. What do I mean by that? You take some of your assets that you do have now, liquidate them, and then shift those assets into a different asset class. So you're diversifying all of your assets over a broader scope of different assets so that your risk is diversified away. Now, that may mean that you're taking money out of the large cap stocks, for example, and you're shifting some of that money into small caps. This looks historically like a time right here in the middle of 2024 when that strategy looks to be very, very smart. Whether it's mid cap or small cap, those companies have not had the same rise in market value as the higher cap companies as reference to the Standard & Poor's 500. So a way to diversification, to give yourself a more safety, is to simply diversify. Okay. And then the third strategy is what I call hedging. Now, a hedge is simply taking some of your cash or some of your risky assets and moving that into what we call a hedge against inflation or a hedge against higher volatility. In inflationary times or deflationary times, when interest rates are changing quickly, when we are having a very fast change in geopolitical risk and fast changing markets, hedges are one way to really truly help protect your portfolio. What is one of the best hedges right now, I believe, is an investment in gold. There are ETFs that you can buy that give you access to gold. You don't have to buy the actual gold bars and put them in your drawer, or have to pay insurance on the actual taking possession of the hard gold nuggets or gold bars. You can simply buy an ETF on the markets, and it's an exchange traded fund with a daily fluctuation to be highly liquid, buy, sell, buy, sell. You can do the same with silver. You can do the same with other commodities, like an exposure to oil or other commodities. So those are the traditional hedges against inflation that will also help to secure and modify the volatility in your portfolio. Does that make sense?
Yes.
That makes sense to everybody? Put a yes in the chat if you're feeling like you understand that. The three basic portfolio strategies. Yes, yes, yes.
Yes.
Great.
Yes.
Wonderful. There are so many strategies really that one can secure a portfolio. I did want to today just kind of give you the basic ones, but let me move forward and give you three more advanced asset protection strategies that professional portfolio managers use with their clients. And many of these I have used with clients throughout the year. As I have had clients who require more sophisticated approaches, we have, as money managers, certainly the tools to give as sophisticated an approach as is needed. But oftentimes, these approaches are not needed. But let me give you a little bit of insight on three strategies that are available to investors. The first one simply is what we call, actually, it's a stop loss order is the first one. It's a simple transaction that one makes if you have a large position. Let's say you have a large position of one company like Microsoft or Apple, for example, and let's say, or NVIDIA, which was one of the hot stocks recently. And let's say that that stock has been making new highs, as NVIDIA did at the top of its market, right around $140 a share. Had you put in a stop loss order, which is an actual transaction that you call up to the stock exchange. Look, that's an old habit because we used to call up to the stock exchange. Now it's all online. But it is an actual transaction. in your portfolio that you make a stop loss order. And what it does, it stops you out at a particular price. You put in a particular price that you want a price protection. So as the stock moves down to that price, you are basically stopped out, or an automatic sell happens in your account. That's called a stop loss order. It's an obviously one strategy that's highly useful, especially in fast moving markets. However, there are some problems to that, because in volatile times, you can easily be stopped out quickly. And I've had many clients who absolutely insisted that I do a stop loss order strategy for them, only to be stopped out, have to pay taxes, and then the stock would just turn right around and move back up over time. So a stop loss order is not absolutely perfect, but for those who are extremely nervous about losing the gains that you already have, it's one strategy. A second strategy, as I put up here, is called buying put options. Now, what that means is that you're actually buying insurance against the valuation decline of your overall portfolio, or of a single asset in your portfolio, or a single stock, bond, mutual fund in your portfolio. In that case, there happens to be investment vehicles called options, call options and put options. They are derivative instruments that you can purchase or sell that basically adds insurance to your portfolio. And what it means is that you're basically buying an insurance contract such that you want paid if the stock moves down. The insurance contract pays you an equal amount, so that at the end of the day, your stock goes down, the put option goes up, and at the end of the day, your valuation is equal. That's the concept behind it. The actual reality is extremely difficult, but that is called buy put options. And many of the sophisticated investors use it not just on one stock, but on an entire portfolio of stocks to find those put options that that can be purchased to give enough insurance. The third is to buy or sell leveraged funds, or ETFs. And this is something that's rather new. It's called a leveraged ETF. For example, you can buy the NASDAQ 100, right? It's called QQQ. Those are the symbols. Often people buy a leveraged fund that is going in the opposite direction. So as the market comes down, for example, as the NASDAQ 100 index starts to come down, you can actually buy a reverse index QQQ. It's called an SQQQ. You can actually buy that as that index comes down. This leveraged ETF goes up in price. And it can go up one time, or you can use leverage, meaning purchasing margin, to make it up 2 times. And then some people who have high risk tolerance cripple it, so that for every dollar of downdraft in the portfolio going down, they have an insurance policy by which they buy the opposite side of the index. It's quite advanced. And I can only tell you that these strategies, which are available to all investors, are the number one things that investment advisors get asked about during toppy markets. And we spend a lot of time helping clients understand that it is possible, but it also is really only for sophisticated investors. So I like to put a fair warning here that as we are looking to secure our portfolio, be aware that these kinds of articles that you might be reading in the press right now that you can do this, you can do that, you can use stop loss orders, you can use all these sophisticated ways. Yes, you can. However, it requires the use oftentimes of derivative instruments. These are highly risky, very volatile, and it requires a lot of knowledge on how they operate. It requires a use of margin. You have to borrow funds to actually use them. That means more borrowing costs. It requires a higher risk tolerance overall. It requires tax expertise because these are fast-moving instruments that have tax consequences for sure. And it also requires a higher expertise, time, focus, and frequency of trades, which I have found most customers don't like so much. It makes a higher risk overall. So, bottom line, it's a higher expense. Why are people doing these sophisticated trades? They have the feeling that they want, in the end, to not have their assets at risk. But this is a time of risk, and it is also a time of higher expense, just as it's more expensive now to insure our homes, insure our cars, right? The cost of insurance of all kinds are going up. So I would just like you to be aware that what we are learning out there in the financial press sounds good oftentimes, but it can be very, very risky unless you're a sophisticated investor. If you are a sophisticated investor, working with an expert portfolio advisor who knows these strategies, which I used to absolutely work with clients who had highly concentrated portfolio concentrations, and we were very, very successful in lowering and mitigating the risks, but it did take an early planning. So here we are in July of 2024, right in front of what I think is an inflection point. We have an opportunity to really look at how we want to secure our portfolio, but it might be as simple as, if you feel uncomfortable about risk factors ahead, maybe something as simple as liquidating a portion of your portfolio from risk on to risk off is all you have to do to go back to that sleep at night factor that I believe in. So finally, I wanted to just cover a little bit about making confident financial decisions for yourself moving forward. What is that going to take? And what is it going to look like? And how many of you feel like you have the ability to make confident financial decisions for yourself right now? How many of you feel that you are at the point where you can make confident financial decisions for yourself? If not, here's what I would like to suggest that you can do. And that is to build better trust with yourself and with your chosen investment advisor that you're working with. One, know what you own. Spend some time to really understand what it is that you've already purchased, whether it's quality, whether it is not quality, whether it is high risk, whether it is at a risk that you can tolerate. Know what you own. This is the one thing that you can do at the least to increase giving yourself more confidence as an investor. Know what you already own. Be willing to do the research. Take a moment, have your investment advisor send you the research on every one of your asset classes that you own, every one of the companies, every one of the ETFs, every one of the mutual funds, every one of the REITs. What is it? What are the earnings? What is the quality? How much are the growth? What's the growth rate of earnings projection going forward? Know what you own. And if you feel like you don't own the right things, begin to liquidate from those things that have a higher area of risk. Ask questions. Number 2, ask questions. This will increase your confidence. Find people that you can trust, that you can ask questions. Become curious. Number 3, become curious about your finances. What will help create wealth for you? What does create wealth? Become curious about how does money actually move from an investment point to, when they say buy low, sell high, that's a very, very simple way of navigating the world. Wouldn't it be great if we could all do that? I have so many clients who used to say, Lynn, if only we had held on to an Apple computer or IBM or Microsoft way back in the early 1980s. If only I had held on to something of quality for a long time. Become curious about what creates wealth over time. Buying quality and holding quality, in my opinion, creates real wealth over time. And of course, everything moves down in a down market. Yes, we have to batten down the hatches, secure our portfolio so that we are not at total risk. But be curious about what you can do and then do the proper thing. Number 4, get educated. Find courses. Look around. There are so many resources online that you can do a do-it-yourself education course, or find places like the financial clinic that I'm putting forth for everyone, so that you can have a structured way to learn what is quality. How can I look at my portfolio? How can I measure the difference between quality and non-quality? And how can I understand how to build wealth over time? And then number 5, reward yourself for the progress that you do make. Reward yourself for making better financial decisions. Many of us, all of us, myself included, have made mistakes along the way. We all do. It's part of learning how to be a great investor. Most of the errors and the mistakes that I have made as an investor, the losses that I have taken, I have gained doubly, triply, quadruply by means of the lessons learned. So over time, it's really important to give yourself credit for what you are learning, for the willingness that you have to actually become a better investor over time. Does that make sense? Does that make sense, everybody?
Yes.
So this is the moment that I'm here to really be what I call an advocate. I believe that inside every one of us is an ace money manager just waiting to be empowered. All it takes is just a little bit of knowledge, a little bit of help, a little bit of handholding, a little bit of advocacy. And so I'm really excited to be part of what I think is your team. Cultivate a team around you that you can trust. A CPA, make sure that you have a solid team in place. That's going to include an attorney potentially. It's going to include an investment advisor potentially. And it can also include an advocate, a financial advocate or an investor advocate, which is what I am absolutely excited about, because I believe there's a need for those of us investors who have a CPA. You might have an attorney, you may even have an investment advisor, but somehow you still feel like you need some guidance, like you need some direction, like you need a little bit of expertise that you can go to. So I'm happy to be a resource for you. I'm happy to advocate with you and for you, just like a medical advocate. Um, the complications of the world are getting greater and greater, whether it's in the medical field, the financial field, our complexities are getting greater and greater. There's no better time than to surround yourself with a team of experts, people who can advise you so that you can feel like you can secure your future and build wealth over time with a group of advisors, people that you can ask questions, people that you can get curious with, and people that you can learn from. And so with that, I'm so delighted, really, truly, to now bring to you a gift. Bring to you a gift that I have been working on for a long time. And I'm going to just now close my PowerPoint. And Michael is going to pull up for us, drop in the chat, right, Michael? Okay. Take a look in the chat. I would like to invite you to something new that I am putting as a gift to each of you. This is my financial advocacy health checkup. I invite you to take a moment and just take the health checkup. All it's going to take is a few minutes to answer a series of simple yes or no questions. And let me tell you a little bit about what's going to happen if you do. A health checkup is just what it sounds like. It's just going to take a few key areas to determine where you sit in terms of your expertise. And at the end of these questions, I will be able to determine a way that I can advocate for you on how to help you to shore up your weaker areas and complement your stronger areas. And I think that this is something that you're really going to have fun with. So when Mike sets this, I would like for us to just take 2 to 3 minutes, and I'd love for you to answer those questions, because when you do, here's what's going to happen. You're going to immediately receive for yourself a total summary of your strengths and weaknesses and a score. It's actually going to be a health check score. It's kind of fun. Something that I found, and I think that it'll be fun for us to do. But more importantly, what you're also going to be receiving is my expertise looking over your shoulder, and I'll be looking at the results of your health checkup. And within 24 hours, my gift to you is that you will receive in your email a personalized video clip from me, having looked at your results, and I will give you my personal suggestions on what I believe that you can do to shore up, perhaps to securitize, to secure your portfolio, to shore up your future wealth creation. How does that sound? Does that sound like fun?
Nice. Yeah.
So if you'll just take a moment now, we have a little bit of time. We'll put on the clock here, put a little bit of time, and we will just take a few moments. If you wouldn't mind, click that. And Mike will put the clock. Here we go. We have a little bit over 2 minutes. Let's see if we can get them all the questions answered in that period of time. Okay, this will be fun.
No.
So I think that's the end of the clock time countdown. Is everybody finished? Anybody
Yes.
not finished?
Yes.
Okay, great. So how did that feel? Was that fun?
Yeah.
You had did you receive something back immediately?
Yes.
You did.
Yes.
Yes, you did?
Yes.
Yes. Okay, great. Now, this is just for fun because what it does, it gives us a score, and it shows a little bit of your areas that you can focus on for strengths and weaknesses. And what it does also, it allows me to review this for you. So I want to, first of all, thank you so much for taking that little test and seeing what can happen, because when we take a look at answers and ask ourselves some questions, even though they might be basic, there are some interesting insights. And as I review your answers to these simple health questions, because I have had the background that I have, I'll be able to give you some special insights. So as 24 hours or so from now, you can check your email and you'll receive a special gift from me, which is a video of me talking to you personally, one-on-one, having reviewed and analyzed your health, your financial health checkup, and I'll give you a deeper dive review of that. How does that sound? Is that fun?
Mhm.
Awesome. Great. All right, everyone. So really, that concludes the portion of this master class. I hope that you've had some wonderful insights and some ahas. Why don't we open up the chat now? I don't mean the chat, I mean the audio. And if you have any questions, you may ask a question or whatever it is that's on your mind, or give me some ahas that you feel that you have gained from being here together today. Would anybody have a question? If so, raise your hand and we will unmute you, or something that you would like to share, your feedback. Go ahead, Miriam.
Hi.
Miriam?
Is the speaker on? Can you hear me?
Let's see. Hold on just 1 minute. Let's see if we can you from this.
All right, you should be live.
Okay. You should be
Okay. Okay. Awesome. Thank you, Lynn. You know, I notice patterns on myself. So this is a time, you know, I'm about to make some changes and I'm right at that point, but I don't feel I travel a lot, and I let go of things that I know I need to be more aware, more on top of it. So it's been a great reminder for me to stay more on top, because I travel and I, lose time, lose everything. This has been a great check for my awareness. So I'm exactly where I need to be. I did the testing, saw the results, and it's exactly where I am. So time to get to work.
Time to get to work. I
Yes.
love that. Self-awareness is 90% of the battle, I think, really. Oftentimes, I really appreciate that feedback. Thank you so much, Miriam, because we get oftentimes what I call that outer other syndrome, where we're looking at the news all the time. We're being buffered by certain fear-mongering,
Yes.
certain articles that get us upset, and it
Yeah.
seems to be coming from the outside. And what I loved about what you said is that taking a moment of pause to really reflect and look at you and where you are in the world with your portfolio, and really at that moment of pause to analyze your personal risk, how you
Yeah.
feel about your investments, and maybe a deeper gauge into your understanding of what you do own.
Yes. All of the above.
That's
So
excellent. Thank you so much. I couldn't have asked for anything better. That alone is exactly the intention of that I had set for this master class, is really that self-awareness piece is 100%. We are responsible for our own well-being as an investor. This is not, the markets out there are not happening to us. They're
exactly.
happening with us.
Yeah, exactly, with us. Yeah. Agree. So thank you. Thank you.
So thank you, Miriam. Thank you so much. Anyone else? Have a comment or an aha? All right. Yes, Rhonda?
Yeah, I just want to say thank you. I loved your survey. I loved how it was constructed. I loved where you have us focusing at there, and really, I'm really looking forward to your comments and your feedback on that. So thank you so much for giving us that opportunity.
Oh, you're welcome. I think it's something kind of fun, and it's an opportunity for me also to I think give you a perspective or a point of view, even though it's just one step. It's just a small step, but that's what it takes. It takes a small step for us to have some questions, and questions oftentimes are the one thing that point us in the direction of an answer that leads to another question. And then that leads to another question. And so I think that, as I was saying before, an inflection point, whether it is in the markets, whether it is in our personal lives, this is the time. This is the time to pause. This is the time to ask those questions so that we can have some more self-clarity and really learn how to trust ourselves first, and learn how to trust then and ask good questions so that we can find people that we do trust, so that we can arm ourselves with excellent teams, because I believe truly that's what it's going to take going forward in more and more complex societies, to have a team around you, so that you can be well informed by many different specialties, and also so that we can reestablish, build trust. I really do believe that we might be in a recession of trust, and it's up to us to learn how to become better investors by means of an inside-out, deliberate methodology. So thank you so much, Rhonda. I'm glad that was helpful to you. And once again, it might feel elementary, and it's meant to be, because it's just the beginning. We have to have the icing, then we can have the cake, or at least that's the way I see it, because I like icing. Any other comments or ahas today? All right. Well, if not, we will conclude this portion, and we will now take a little bit of a moment of pause, because today is my birthday, and this is my party. And this is the time in which we are going to have a little bit of a celebration. Oh, yes, we are going to celebrate. So, Mike, I want to everybody to meet Mike, who is here. And I would like to have him come say hello to us when he can get away from the camera. Look at that. This is my birthday, and I'm celebrating with my friends. This is the time that I love, because we are celebrating, and this is Mike Domaresius, and he is the owner of this studio. He has really blown my mind with having all kinds of screens and apparatuses here, lights, camera, 3 cameras. One of them didn't work. We've had some technical difficulties, but all in all, Mike, thank you so much. And
Cupcake.
we have cupcakes. So Mike, this is
We're in Venice. You want to come down, guys?
Venice, Florida. This is my cupcake for my birthday. And please help yourself
Oh, thank you.
to a cupcake right here, Mike. And I wish I could just give you all a cupcake right on through the screen and have you enjoy with me my birthday, because sometimes you just have to throw your own birthday party. You know what I mean?
Right.
We got a happy birthday sing along.
Happy birthday to
To you. Happy
Happy birthday to you. Happy birthday, dear Lynn.
Happy
Happy birthday to you.
Thank you.
And
That's
many
awesome.
more.
Thank you so much. I really appreciate that. Oh, thank you. I see people popping on. I really appreciate it. You know what? I'm 73. Hi, Pamela. Nice to see you. Nancy, thank you for being here. Anne, Ellen, Pat. I haven't seen you for a long time, Pat. Thank you for being here. Mary Claire, my beautiful Lois friend. Rhonda, Miriam, of course, and several others who have not popped in, but who are listening to us in the background. That's okay. I'm going to really enjoy my cupcake because I love cake. I love icing. So I'm 73. They call this a new level. A new level. And so I do have a couple of wishes. And one of the wishes that I'm going to share with you is I have been on the board of directors of a wonderful nonprofit organization for many years called Spirit Awakening Foundation. Several of you know that foundation. Olivia has been to many of the Spirit Awakening Foundation functions out in Los Angeles. Right, Olivia?
Yes, it's a wonderful organization.
And so the Spirit Awakening Foundation has a wonderful founder. Her name is Akuyo Graham. She has dedicated her entire life to helping at-risk youth. And so she had built 30 years ago a foundation, self-run, woman-run, African American. She's originally from the country of Ghana, and she serves youth coming out of jails. Now, Los Angeles County has had lots of young people in their jails. Probably one of the top cities that have had that, problem. Lots of trafficking, of course, lots of problems. Youth oftentimes get thrown into jails with adults, and when they come out, they're lost. So the Spirit Awakening Foundation helps with a safety net when they come out of jail. They also, Spirit Awakening also helps youth in schools. They actually have a school program whereby they counsel young kids how to not choose violence. So it's they have a whole program on helping to create peace on the campus, to create a resolution of conflict resolution. Tremendous programs in the schools, mostly in the high schools. They have, I think, something like 45 schools now. Hi, Valerie. You came just in time for my birthday party. I'm having cake and not ice cream. I'm having cake and icing. So, Spirit Awakening Foundation is the love of my philanthropic life. And so what I do with all of the income that I create, including from the financial clinic here, including from the Wealth Builders Express, I tithe. This is my personal organization that I've chosen lifelong. I've been on the board now 30 years. And next year, wait, it's not 30 years yet. It's 29.3 years that we've been in operation. And next year is our 30th anniversary. And we are going to throw a huge party out in Los Angeles. And I want you all to know that you're invited to this huge party. And I'm getting ready a whole year in advance because they have made me the chair of that party. So it's going to be a great party. And my birthday wish today is, I'm just going to say this out loud, that party is national in scope, that we raise the amounts of money that they want to raise. I think that their goal is 200,000, which is really not that high as it relates to fundraisers. And for a 30-year organization, I think that we'll easily hit it. But I'm saying this to you a year in advance. Why? Because we've already started as our group to contribute to Spirit Awakening Foundation. So on my birthday today, I have a wonderful announcement to you all. I think that some of you already know about it. And I have invited Akuyo here today, but I'm not sure if she has made it. I don't see her in the ranks. However, if she comes later, I'll just repeat this. But I have gifted to the Spirit Awakening Foundation, in the name of the Wealth Builders Express, this wonderful book that was written by one of our members on the Wealth Builders Express. And her name is Juanita Enns from Canada. And she wrote this book called Your Kids Own Money. And it is a wonderful workbook on how children can learn the principles of good money management at a very young age. And how many of you would have loved to have been raised as a money savvy child? How many of you would have loved to have had some guidance and to be raised with principles? This is a workbook that is really amazing. Spirit Awakening Foundation has already received, they just received their package, she said, about 2 days ago, a gift of 20 of these books to their mentorship program. They have about 6 or 8 young girls going through their mentorship program each quarter. And so 20 books, she said, will be just about perfect for their 1 year mentorship program. So I want to just say that we're already in the groove of giving gifts. And I love it that we can give a gift to the Spirit Awakening Foundation in advance of their 30th anniversary. but just as an announcement well in advance, that we're going to be getting together in Los Angeles, California in October of 2025 to an amazing program called Voices of the Unheard. It is an amazing program whereby these young children who are incarcerated go through a writing program asking themselves, who am I? Who am I underneath the color of my skin? Who am I underneath the circumstances that I find myself in? Who am I underneath what my parents say that I have been? Who am I underneath what the justice system tells me that I have done wrong? Who am I underneath that? And this program of Spirit Awakening Foundation helps the children write. It's amazing. And then they publish their writings into books and publish the books. I think we have 18 books published over the last 30 years. The writings of these young at-risk youth, as they sit in their jail cells writing the answers to the questions that are posed to them by Spirit Awakening Foundation. Akuyogram has a wonderful group of a team that goes into the jails and into the incarcerated areas, and they work with these children. So once a year we have a program, and next year we're going to have a program called the Voices of the Unheard, where out in Los Angeles we get a hold of all of these famous actors and theater people, and they take these books and they take these writings and they get up on stage and we record it and they read what these children have written in theatrical style. So the whole evening is so full of tears at the end of the evening. I don't think there's a dry eye in the whole place. And we've been doing this annually for 29 years. And then next year will be our 30th anniversary. So I'm excited to invite you all in advance and just let you know that today, on my 73rd birthday, I'm giving these gifts as a token of my love, as a gift to the Spirit Awakening Foundation in your name, in the Wealth Builders Express name.
Thank you so much.
And so I think
Thank
this
you,
is very
Lynn.
important. Ta-da!
Ta-da!
So we have, that brings about why we're doing all this to begin with, not only to build wealth, but also to give back. Am I right? To
Yeah.
build wealth, to give back, to become a philanthropist, to fund our own dreams, to have access to what is important to us, to ask those important questions like, for the sake of what am I doing all this? So on my birthday, I'm answering these kinds of the same questions that I posed to you all today. Take a moment, have some pause, ask yourself these questions. Where am I on a scale of 1 to 10? How am I feeling about the economy? How am I seeing myself? How am I doing? Give ourselves some credit. We've come a long way as women. We have a long way to go. But how can we get even further down that road if we can't really take a moment for ourselves to empower ourselves, refill our coffers with really good, lots of icing cupcakes, because this is what fills my coffers. Absolutely love icing. If I can have a good icing, I'm happy. I'm a happy birthday girl. And with that, I just want to thank you all for being with me, celebrating me. I'm looking at my camera here, but I really mean to be looking at each one of you and giving you kisses and giving you love. I'd like to thank Mike Domaratius for this beautiful studio. We had a few rocky moments, but boy, do I feel blessed Thank you so much, Mike, for making this possible for us. And with that,
Yes,
everyone.
Mike, thank you.
Happy birthday, Lynn. Thank you for
You're
the wonderful gift that you've given us through the years.
Happy
Thank
birthday.
you. Thank you for your
Happy
birthday
birthday and
wishes.
thank you.
Happy birthday.
Happy birthday, everyone.
Yeah.
Happy birthday. Bye, everyone. Thank you so
Bye.
much.
Blessings, joyful blessings. Bye.
Bye-bye. Happy
Bye-bye.
birthday.
Bye. Thank you.